Hi, everyone, and welcome to another Dolphin Financial Radio Show. Today, we're going to be talking about the 2022 retirement landscape. What is going on in the United States when it comes to retirement? What are people thinking? What do employers think? And I'm going to reference a study or a survey that went out to employers and retirees and actual workers and get their take on what they think about retirement. And you're also going to get my opinion as to what I think about what they think. And we're also going to get Tony Shore's opinion. There he is. Tony Shore, you're getting involved today in the discussion. Last week, we talked about retiring during volatile times. So I guess that's an easy lead into my question to you. And what we're going to discuss today is, what do you think about retirement in 2022? What do you think people are saying and doing?
Well, Dan, let me take my binoculars here and look out on that 2022 horizon retirement landscape. You called it the retirement landscape. Let me check it out. You know what? We can't see the end of the world from here. No, we're not quite there, but I can see it. Nope, I do see it. I do see the end is out there. We can see it from here. We're not there, but we can see it from here. No, there has been a lot of doom and gloom, obviously. But I think, sure, I think people, what do they think right now in 2022 about retiring? If you are retiring this year, or even if you've recently retired, I would assume that you're nervous. I think a lot of people are concerned. They're worried. They're nervous because of the main two factors that we can't ignore that everybody's talking about: inflation and the markets. Even though the markets the last few days, as of the recording of the show, we've seen some bumps up, we've seen some positivity, but I mean, it's still in the basement year to date, if you look at the year to date numbers. So we've got a long way to go to climb out of that. But again, with the market volatility, that happens. I'm more concerned. I would be more concerned if I was retiring or was in retirement about the cost of goods. I'm concerned at this stage, let alone retirement. But I think that's a big concern because maybe people have a budget or a spending plan or an amount they plan on spending in retirement, and that's kind of been turned on its head. They might not have enough now budgeted because of the cost of goods, and because if their retirement funds are in the market, as you mentioned this last week, those funds are probably down. They may have lost 20%.
Right. I think you hit it on the head. But I still want to
Wait, I was right about.
No, let's move on quickly. Can I edit out what I just said there? I'm not going to edit that out. You were right. So what I want to do is reference the survey that went out.
Sure.
And this is BlackRock. They call it the 2022 BlackRock Read on Retirement. And they survey employees that work at a company with employer plan. They actually survey the employer sponsors of the plans. So when you have a 401k, someone's sponsoring it. The employer has to pick what goes in it, and they have to think about it. So what they think about retirement is important. And they ask retirees and people that are saving in general. So I want to highlight, and people that are watching, they can look at the link right there. It's in there. I'll put it in the show notes, and you can read this yourself. But I want to highlight the key findings on this and talk about what we think about it. Yeah. So 2022, what's happened? Confidence is down from the previous years.
And I would assume so.
The key point here is 42% of workplace savers said that COVID had set them back when it comes to retirement. Why would a global pandemic set your retirement back? I don't know. Maybe you missed work, or you got sick. Maybe you were concerned about the future and you had to tighten the belt and didn't put as much away in retirement. So that is true. Confidence is down. And I also think the shaky start to 2022 when it comes to the stock market in general has people saying, wait a sec, I have less in my 401k than I did at the start of the year, yet I've been contributing every paycheck. that's not a
Ouch.
confidence booster, right?
No,
Right.
that
And we
because
talked
then you
about
see
that
that
last
money go
week.
bye-bye,
Right.
bye-bye
Where
money.
is it? Where did that money go?
Yeah.
Right. So confidence is down, and then you hit it again, Tony. You're right. Inflation is concerned. 87% of the workplace savers are concerned about inflation. That's up. That's up big. And in fact, if you think about inflation, I don't know, 5 years ago, so we'll say in 2017, 2018, inflation, we weren't talking about inflation,
No,
right?
never. Yeah. I mean, we might say, hey, you want to at least keep up with inflation, so make sure your money's making at least that much, which
Right.
that's the
2%.
bottom, which was 2 or 3% at
Right.
most. 3%, you're doing great. So
Right. And fixed rates, we did a show on fixed rates going up now because inflation's
that's a good
10%.
one.
You need, 1% is not going to cut it anymore.
No.
But that's a big factor in retirement. And we've always said that we have to, when you're creating a retirement income plan, you have to factor in inflation. And people get that because they know that goods don't cost they cost a lot more for the same thing 10 years from now in retirement, and you're not going to be working. But I think showing an 8% inflation rate is unrealistic. I think it'll come down. But
Yeah.
when you have a 10% cost of living potential on Social Security, people start to say, wait, this is real. This is real,
Yeah.
right? So
Yeah.
that is a big concern. So the survey wasn't showing us anything overly interesting there. But let's talk about some interesting findings from this survey from BlackRock. 86% of plan sponsors believe it would be helpful to reallocate assets to more age-appropriate investments over time.
Wow. So people are becoming more educated on the fact that they need less at risk as they get closer to retirement, maybe?
And the sponsors that are putting these 401ks together think that it's a good idea to do so.
Right.
But what do? Technically, they don't do too much. What they have done, and we alluded to it last week, is they offer target date funds.
Yes.
Because the theory on target date funds is you pick a date, target date funds. In a nutshell, I pick target date 2040. What does that mean? That means I intend to retire in 2040, so my assets will be in there, and by 2040, it should be shifting so that at that point, I'm less risky, right? We did an entire show on target date funds and the fallacy behind many of them. One thing I would say is if you're in a target date fund, go all in. If you're going to get a target date fund, don't put like 25% in it and then 25% over here. And then you're defeating the purpose. The whole point of the target date fund is that it's an all-encompassing active change over time. Is it good enough? Well, let's think about 2022. Target date funds are down.
Of course. Yeah.
Right?
Because they're still attached to the market. They're still, when you say funds, they're still stocks.
Or bonds, which can go down. People are realizing.
Which we've
really?
seen.
Is that
bonds.
true?
I have to laugh whenever the word bond is mentioned. It's actually sad. It's either laugh or cry because they've been terrible.
They have, but they're going to come back, Tony. The heyday of bonds will return at some point, but people think that bonds are the alternative to stocks, right? But they both are risky. So the 401k has its limited options. Target date funds are there, but the key is that the plan sponsors know that reallocating as you age is important. But getting people to do that is tough. Most people set it and forget it. It's the Popeil or the oven, rotisserie oven.
Ron Popeil.
Right.
Set it and forget it.
That's what most people do with their 401k. And then 20 years go by and they haven't adjusted anything, which is good and bad. It's good because you're not thinking of it, overthinking, and you're letting the market do its thing. It's bad because you're not realizing that as you get older, you need to change your investment strategy. Maybe. Or maybe not, but so back to the target date funds, 85% of workplace savers that are not invested in a target date fund currently, want to be invested in a target date fund after reading a description of one. So they're
Sure.
like,
They sound good.
they sound good. Right. So there's an education issue here. People don't know
Sure.
what these things are. So I'm not saying they're bad. In that show that I talked about, we kind of say, some negative things about them, but they're not. It's not like we're saying you don't want one. It's just that they're not everything that they made out to be. It's just that people don't even know about them. What does a target date fund mean? So employers have to educate them. And when they do, people say, I like that. And why do they like it? Because it's active. They feel like you're doing something instead of sitting on the
it's not
sideline.
just sitting there. It's not set it and forget it. It's not just doing nothing. It's not staying the same and no changes are being made. There's changes or adjustments that are being made over time based on your time horizon.
That's right. And
Yeah.
people like to feel
Yeah.
that there's something customized for them,
Yes.
that there's something that's proactively changing for them. One of the interesting things that I didn't have up here, but that was in the survey, is that over 80% of sponsors felt that active management of funds outperformed the market in general. So they believe that active managers outperform the market when the actual opposite is true.
Right.
Right. But
Yeah.
people like activity. They like things customized for them. They like to feel that they're not just throwing passively money and hoping. The idea of a target date fund to them says, oh, I'm going to retire in 15 years. My fund's going to be, someone's going to pull a lever that makes sense for me. So that's why people like it.
Sure.
Which just reminds me to remind the listeners, you have to be active in your portfolios, even if they're in the 401k. Educate yourself on the options and figure it out. Don't just, don't ignore the person in the lunchroom breakout session.
Yeah.
Ask them questions. Now, they're probably not going to be able to answer them.
Right. Yeah, that's not always the best idea.
Yeah.
I think what people need to do though, Dan, and you can tell me if I'm correct on this, but the thing to do, especially with the 401k, because I know my wife and I did this and we had no idea, is, people don't even realize exactly what's in their 401k or what it's doing. So you can go to a financial services professional, Dan Wendell, I know the guy, and you can run a report and it'll break out. Here is what is, especially for couples, you have this in this 401k, and here's the stock breakout, here's the percentage, here's this. And so you have overlapping. This is really not diversified. It's not balanced. And so we can make adjustments, and you should make this adjustment based on where you're at. It's really important to do that because your company and the HR team, and nothing wrong with your company or the HR team, but they're not going to be able to break it out like that. You run a report like the Compass report or something, right?
Yeah, it's just like Social Security. You want advice, you don't go to Social Security. They're not allowed to give it to you. They'll help you move things and figure out how to add more, but yeah, you should talk to someone about it. I do that all the time for people. If you go to a financial person and say, what should I do with my 401k? And their default answer is roll it into an IRA and I'll manage it. Then you're talking to the wrong person, because sometimes it makes sense to stay in a 401k. The conversation should be, okay, here's what you have in your 401k. Here's what you're trying to accomplish. Which of these options makes the most sense for you? Oh, and by the way, did you know your company offers a Roth 401k option? Should you do that or should you do traditional? Well, what does that mean? Another show, another time. But that's the kind of conversations you should have.
Yes.
But a lot of times the default is roll it over into an IRA. Now, on a little side note, legislation was passed and now is being enforced as of July 1st, 2022, that in order to take money out of a 401k and into an IRA, there has to be in your best interest by law. So if you're working with a financial professional that hasn't mapped out in very vivid and detailed explanation of why you're moving from a 401k into an IRA, you better think twice, because they could put themselves in trouble, because the government is now going to crack down on people doing that.
Yeah.
So, but regardless of whether or not you are actually understanding your 401k or you having someone pick for you, you have to take the time to learn it. And if you have a 401k, know the options and understand the target date funds. So just don't, because what most people do, I don't know which one, I'm going to put equal across the board. Doesn't work. It's not always the best. Okay. Here's another final piece that I pulled from this survey that I thought was interesting. People want retirement income. 90%, 9 out of 10 people, workplace savers, are interested in owning a product designed specifically to generate income in retirement. I don't know what the 87 is there. Maybe that's a typo there, but 90% are interested in owning a product designed specifically to generate retirement income.
Wow.
What?
That's called it was called a pension.
There it is.
And now we don't have those, and your 401k is not a pension, your IRA is not a pension.
Right.
The money, even if you have money sitting in a bank or in real estate, that doesn't do that. So that's why products have become popular, like fixed index annuities, because you can get an income rider where it'll give you put money in and it gives you a certain amount every month after you retire, after a certain time period. So yeah, that's right. Am I right?
That's it. People, can I have my pension, please? Like, where did the pension go? I think the people want the pensions, right?
Yeah.
It worked.
Yeah.
It worked. And now it doesn't work. Why?
Right.
Why? Because people don't have self-control. People don't have financial knowledge. People don't put enough in. So I don't like Big Brother telling me what to do. I don't like big government stepping in. But the idea of having a company create a pension for you eliminated so much financial stress for people. And they're craving it. Look at 90% of workers want income. Now, here's the problem, Tony. An employer has a 401k, and once you leave the company or stop working there, their obligation is done. You don't have to leave the 401k. You could stay there, but they're not going to sit there and babysit you. You're gone. You're done.
Yeah.
Whereas a pension, they were forced to pay you. So they wanted to make sure, they were putting enough aside and you were working enough.
Yeah.
And so people want that hand holding in retirement. But as soon as you offer
we want
it to
that
them,
safety net, and that we want that roof over our heads provided for us. We want the shelter. Yeah.
Right. But as soon as you say, all right, well, in order to do that, you got to give up control of your 401k. The company's going to take it over and they'll pay you out. Oh, no. That's my money. Give it to me. If you said the same thing to someone about Social Security, here's $400,000, or I'll pay you $4,000 a month for life. People are going to take the $400,000. But if they do the math, they're going to get well over $1 million over their lifetime in Social Security.
Yeah.
Delayed gratification. So people want this guaranteed income. 401ks do not offer it.
Right. But you mentioned, everybody wants the pension. We'd all love to have that pension where we were taken care of. We didn't have to worry about retirement. It takes away the worry. It takes away the burden from ourselves. I'd rather have the monthly payment. So that stat doesn't surprise me, but I had to chuckle because you said, what if everybody had that pension? You probably wouldn't have a job, Dan. That's why there are way more financial planners and advisors today, is because the people don't have pensions anymore. When they had pensions, they didn't have as much need, or the majority of people didn't have as much need for a personal, a financial advisor like yourself, a financial services professional. Now they do, because it's gotten so complicated, and you have to have a retirement plan in place. And there are other factors that affected that. But, healthcare didn't cost that much. People didn't have student loan debt, and they had pensions. So the landscape's changed to where, your grandfather probably didn't need a financial advisor unless he, had over 200 million. Then he should probably figure out where it's at and what it's doing.
The financial advisors for the rich.
Yes.
How do I tweak this and that? How do I get generational wealth?
Now they're for almost everybody.
Right.
If you have a job and you have a 401k, you need a financial advisor.
Right.
I mean, it's just that simple.
How do I take my 401k and make sure it doesn't run out of money, which is the biggest fear most people have? That's my job. That's all I do. And here's an opportunity. We've talked about this in the past. The 401k options, there should be some sort of income stream option. Why don't they have an annuity option in there?
Yeah.
You know, it would, yeah, all right. So it would eliminate my job for some people. Not really, because people still wouldn't know what to do.
No, because of healthcare and Social
Yeah, there's so
Security
many
has
other
gotten
things
so,
that go
and
into
taxes.
it. Medicare,
Yeah.
taxes are a big thing. Imagine eliminating the income tax or putting it on a postcard like they always talk about. All the accountants would be out of jobs except for the super rich, right? Who need,
Right.
So,
Yeah.
but this was a very interesting stat to me. People are concerned about inflation. People are concerned about, volatility, and they're craving guarantees. They're craving a pension. What is the 401k going to do about it? I don't know. There's legislation to get some guaranteed income options in there. Hopefully they stick. Hopefully at least get the conversation going.
Yeah.
But I still feel people are reticent to do it, even when given the option. Okay, here's what we could do. We can give you the income. You just have to sign over a big portion of your IRA for that. Oh, no.
So a lot of companies were doing that over the last 20 years, especially less and less over the last 5. But previous to that, over 20 years, a lot of the companies started to get out of the pension game. So they were offering their employees buyouts.
Yep.
And you gave that example of, hey, we'll give you $300,000 right now, or we'll pay that pension amount every year for the rest of your life. And people are like, 300 grand right now, let's go, and they're in their 50s. They're like,
new
they
kitchen,
might be,
get the boat.
Yeah. Yep. And so a lot of people do make the wrong decision when it's right in front of, when a pile of cash is waved in front of them. And the companies knew that, because it was either pay him $300,000 now, or if he happens to live to 90, we're going to end up paying him $1 million or whatever the amount is. So, yeah.
But I'm not saying that's stupid. I'm just saying that's natural instinct. If I won the lotto, there'd be a big surprise because I don't play it. But let's say I won the Powerball, I'm taking the lump sum. Don't give me the, or I'll hand it to my nephew who just turned 18 or whoever I don't even know how old you have to be to play lotto.
Yeah.
Let's say it's 18. Hey, you cash this in and take the life,
Yeah.
I'll show them.
You're already playing the numbers, looking at the math, Dan. I love how your mind works. Yeah.
And this is all it is. It's a numbers game. And the volatility, it stretches over your lifetime. So if you look at the big picture, you shouldn't be worried. But when you're focused on the here and now, I'm retiring next year. Lump sum sounds great. It'll work. And then it doesn't, That's why most lottery winners go broke.
Yep.
It's just a known fact. But yeah, I think that people are concerned. The survey from BlackRock shows that inflation and volatility are concerns, and people don't have as much confidence as they used to. But for a majority of people, they want something done. They want proactive management. They like the idea of target date funds because they feel it's doing something, but they really want income. They want to retire and have that passive income or the retirement pension, which are gone. And so the 401k plans are not equipped to solve their problem or their desire. And so they have to look elsewhere. They have to do it themselves. And that's where we are in this country. You have to do it yourself. And the only way to do it yourself is to actually learn and take ownership of this and not just, hope that the company's going to bail you out or the government's going to bail you out, because they're not. Everyone's relying on Social Security for more and more of their income. Look at that. It's not looking healthy. Unless some things change, that could fail. So you got to be proactive. You got to just start taking ownership of your own retirement.
Yep. There you go. Good advice.
So the big question, Tony, do you think our children will have pensions again? Do you think that by the time they're our age, they'll be in a job that has a pension?
No.
You don't think they're coming back?
No.
Oh man, I think they will. I think they will. I think the state.
I think companies, it costs the companies too much money. Between the government and the corporations, there's too many people in power who are like, I don't think they have the foresight to see that what it does for workers, what it does for our economy, and how it will help them in the long run. I think that, but that's a negative approach. I know hopefully I'm wrong. Hopefully that, like you said, maybe they will make a change to 401ks where there's a lifetime option. But will people have enough? I mean, is that going to be enough? Is that going to be as good as the old pensions were even? I don't know.
I don't know. And part of the problem is that people move jobs so often. So it's hard for a company to get behind that
Yep.
employee.
Nowadays, it's different. You're right. I wish I had the opportunity that they did back when you could get one job, work there, work up, and stay at that company for your entire life, get the gold watch and the pension. That would be so awesome. But now to move up, and it's not that people aren't as hard workers necessarily, it's that to move up, you have to change jobs typically. To get the bigger raise and move positions, you wanna move, and people move around, and, jobs change a lot. And so, yeah, it's a different world we live in, that's the
And
problem.
dangling an increase in salary or a travel budget is much more appealing than, hey, stay with us because in 30 years you'll be set.
You're
It's
right.
like that's a tough sell to
Yeah, it
the
is.
instant
It
gratification
is.
crowd. But
It is.
I
They
think
could sell it to me now in my 50s, I would definitely say,
right
"I
now
will." Yes.
you can
Yeah.
tell your kid, "Duh," but it's like telling my son to, to not drive like fast, that's what you do when you're 15, 17.
Yeah,
I have a
exactly.
more positive outlook on the pension system. I think we're going to solve Social Security and people are going to realize how valuable that is. And I think what might happen is they'll create some sort of global, I don't want to call it government, but I think the government might have to have some sort of say in it, some sort of portable pension, personal pension, where it's like kind of like a 401k. You can put in the 401k, but you can also put into a pension. And if you leave jobs, that pension stays with you. And it kind of is a universal
Sure.
bucket that you can have your own private, like kind of like privatized Social Security in a way, but personal pension for workers. I think that might happen. I think it would be a great solution, just to help people get on track. But we'll see.
Sure.
We'll
Yeah.
see.
It'll
So,
be interesting.
well, thanks, Tony, for your thoughts on this. And hopefully, by the time my kids are able to have a pension, it'll be automatic. We'll see.
That would be
Until
great.
next time. Until next time, everybody. I'll see you next week.
All matters discussed in today's show are for informational purposes only.
This show is not investment advice.
Dan Riddle nor Dolphin Financial Group are affiliated or endorsed by any government agency.
Investment advisory services are offered through Dolphin Wealth Management, Inc., a registered investment advisor in the state of Florida.
Insurance products and services are offered through Dolphin Insurance, Inc.
Dolphin Wealth Management, Inc. and Dolphin Insurance, Inc. are affiliated companies doing businesses as Dolphin Financial Group.
You should talk to someone at Dolphin Financial Group before implementing any of these strategies or ideas.